Record low after record low against the euro, plus multi-year lows against the pound and the yuan. Where and when does the dollar's fall stop? You're watching Bloomberg Money Weekend. I'm Naga Munchetty. We're looking at the coming week's economic data in light of the dollar slump. Is there anything on the horizon that can provide perhaps some respite from the currency's retreat? Well, let's get a view on currency markets with ACM's Advanced Currency Markets Chief Market Analyst Peter Rosenstreich. Peter, thank you very much for joining me. Welcome to the programme. What do you make of this dollar fall? The 150 level is a psychological landmark, so to speak, but where do we go beyond this once it's touched?
Well, I don't think it's ready to stop just yet. I think dollar weakness is in there. It's in the market. The dollar bears are fully entrenched, and we'll continue to see dollar weakness across the board in the euro dollar as well as against the pound and obviously against the yen. 150, like you said, a psychological mark, but very important. I think at the 150 levels, we'll start hearing some significant rhetoric from Trichet and the ECB, and at 155, I speculate that we'll actually see some physical intervention at those levels.
What happens once the levels start edging towards the 155 level? We hear the comments. Are these opportunities for you in your game to start taking profits and perhaps easing off on the sell dollar theory?
Correct. I mean, when you get to these heightened levels and you start having, real concern on a macro level with regards to growth as well as the political front, you really need to be concerned. We look more for short-term changes in the exchange market, and we're not looking to sort of break any banks per se. So at this point, we'll be telling our clients just to ease off if we start feeling like there's a high probability of a large unexpected event in the marketplace.
I want to focus on dollar yen just for a moment. Past week, I've been speaking with analysts and market watchers, and they've all said 100 yen isn't that an extreme a view for the next 3 to 6 months. What do you make of that?
Well, I think it is relatively extreme. I think the $1 market, 100 mark is not going to happen per se because Japan doesn't want it to happen more than anything else. I think at the 105 level, we'll start getting a lot of rhetoric about the strength of the yen, and they're an export-driven economy. They don't want it at these levels. They have a past history of intervening in the market and being somewhat vocal about the currency prices. So I think 105 would be a very, very strong level, and I don't see it breaking in 2008.
What about the yuan? Do you think we're going to see an aggressive advancement of this currency, bearing in mind the moves we've seen beyond 7.4?
Right. I don't think we're going to see any sort of, one-off or major revaluation. I think we'll continue to see the steady appreciation. We'll see roughly about 8% appreciation in 2008, and this is looking at our forecast as well as the NDF market. Despite the enormous amount of pressures building, none of the pressures in China are unmanageable. The factors, factors in our mind don't really see breaking the crawling peg, regardless of the higher CPI numbers, the trade data, the money growth. All of these can be managed, and I think China has a good grasp on that. So we'll continue to see appreciation, but not one of the one-offs that the market has been talking about.
You've mentioned possible political intervention if we see this euro-dollar level move further. How much political intervention should we be expecting on the yuan going forward? We've already heard comments from Jean-Claude Trichet in the past week.
Well, outside of China, I doubt that any real political rhetoric will have too much influence on the Bank of China and their exchange rate policy. What we've seen is that Paulson's sort of soft diplomacy has been more effective than any grandstanding or Euro-China summits where the communique says that they want a stronger yuan. It's been that's been much less effective. So I doubt that any of the rhetoric will have too much effect on China's policy.
Peter, coming week, a manic week when it comes to data, a lot for you to look at. You're going to be kept busy, aren't you?
Absolutely. I mean, this is going to be a very busy week, both in the Eurozone as well as in the U.S. We're going to be going from data point to data point. You know, with the volatility in the market, it's very hard to sort of pick a direction and look for the economic indicators to support that. One of the two major indicators that I'll be looking at is one is personal income and spending, and number two is the PCE deflator. You know, the U.S. consumer has an enormous weight on its shoulder, both in the U.S. and a domestic front as well as on the global front. So seeing how the U.S. consumer does is going to be critical on all fronts.
Okay, Peter, good to see you this today. Thank you very much for joining me. That's Peter Rosenstreich from Advanced Currency Markets. Right.